Hey folks, good evening, and of course, welcome to another Sunday, 7 p.m. West African time, when we're talking money with me, Kalu Aja. On this space, we're talking money, the economy, and of course, finance is what we do every Sunday, right? And this week, we are talking or we are reviewing quarter one 2026 for Nigeria. We won't look at the macro numbers, the wholesale numbers. We won't look at the stock market as a market, but we're going to look at the other asset classes, right? We're going to review those asset classes. And of course, we're going to look at the sentiment in the market. What's the market saying? Are we risk on? Are we risk off? Where's the smart money going to? I want to talk around that sentiment as well. We've got guests in the house. We've got a stockbroking firm, a very experienced stockbroking firm. I use them. Their CEO is my personal friend Tunde. He used to be the president, I believe, of the Chartered Institute of Stockbrokers, I believe, yeah. But they're here, Arthur Stevens, and they're going to be our resource people or resource persons as we walk around these questions and we ask where is the money going to and how the economy is doing, right? That's what we're going to do today. Of course, we are on social media. We are on YouTube, simulcast on YouTube and Twitter. We do have visuals. We like to share those visuals so that way you are able to follow as we are sharing the slides and all that. I think being visual with finance is very, very important because you can see the graphs and see where we're going to as we talk around those topics. So if you want to hop up to YouTube, we're there. We shared the tweet about 15 minutes ago. You can see the link to the YouTube channel. It's just my name, Kalu Aja. Should be able to find it. And of course, we're also going to try to share the tweets on Twitter. And we will just try to put them underneath the main space link, right? So that's that. I think our guests are in the house. I've got Arthur Stevens. Let me ask him to come on air and do a brief introduction, and then we can start the space. Arthur Stevens, how are you guys doing? Welcome in.
Yeah, good evening, everyone. Good evening, Kyle.
How you doing?
I'm doing great today.
Fantastic. Want to get to know you. Who are you, sir?
Arthur Stevens Financial Service Group is a group that combines both corporate finance, securities trading, and portfolio management, all under a single name, Arthur Stevens Financial Group. So we don't only trade in the markets, we also help clients to position in different asset classes and different investments across traditional investments and also alternative investments. So we also provide financial advisory, investment advisory services to both retail investors and institutional investors. So that was basically like an overview of what we do at Dr. Stevens Asset Management.
Fantastic. You guys also SEC registered. We're all good on that one, right? Just because someone's going to ask. And we all have our SEC license and all that, right? You guys are all SEC approved and all that.
Yes, we are. We have broker dealer license for our securities arm and also the fund and portfolio management license for our asset management arm.
Fantastic. Let's get straight into it, right? So we have a disclaimer up there. Like we said, we always do our disclaimer, consult your financial advisor, do your research, past performance. I mean, those standard things that we always say to people. In effect, do your due diligence, do research and all that. And, past performance not a guarantee of future return. We'll do that disclaimer, get that out of the way. And let's go into our first slide I want to talk around. We have this review of the Nigerian economy, right, from you guys and Arthur Stevens. It's packed with information. Let's just start from the very, very top and see if we can work our way. And let's try to link this to what it means for me as the average investor. I have a GDP growth rate of about 31%, 3.1%. Nigeria is going about 3.1%, quarter one, year on year. Inflation rate about 23%. NPR about 27%. I see the foreign reserves about 41 billion. If I take these four critical indices for the Nigerian macro economy, what's it telling me as an investor? What can I read from this? I'm not an economist, I don't know finance, but what should I look at and what is it telling me, if you will?
From these major drivers, we can see, like I said, a 13% increase in GDP. Shows how the market is expanding, and also how the market is faring. So we can also look at how it flows into different investments for us, and our investments across different areas and major drivers of the GDP. So in terms of telecoms, financial services, and the broader service sector. So we as investors, or let's say investors in general, we are affected by one of these sectors, and would also love to know how they will significantly affect us in terms of our inflation, in terms of foreign exchange. So we moved from about 33% in 2024 inflation to about 13.38% as at March figure. So we started the year about 15.10%, and around February we saw CBN easing. Around March, we saw around February, we saw CBN easing the MPR rate. So basically, what it's telling us is we are in an economy whereby not just one component is driving what we investors are playing in, what investments we are taking, and also ideas around where we are investing our money.
So if just jump on inflation. If inflation rate is going down, that has an impact on where I'm going to put my money, right? I hear you say CBN was bringing out reducing rates. Is that going to be the trigger for me if I see inflation going down in Nigeria, that rates in banks and bonds are going to go down as well?
No. So basically, MPR being a major instrument used by the CBN to control the monetary policy ecosystem. So basically, when we know currently at the percentage where we are at now, we're around 26.5%. So moving from 27% to 26.5%. So basically, that's giving us a signal as to how CBN is seeing the market as a whole. So we are seeing more liquidity. So basically, we moved from a period in 2025 where we moved from a period of issues around foreign exchange, reduction in liquidity as regards foreign portfolio investment and the likes. So
Gotcha.
Major drivers like we made mention of the Nigeria's external reserve. We've also seen increase. So about I think about 13% also.
Yeah.
Around so I think it's currently at its 13 years high. So about 48 to 50 $15 billion. So and the reason behind this is supported by the increase in oil production, stronger foreign portfolio inflows, and stability around foreign exchange. Around foreign exchange. So basically, we are seeing. I think currently we have about 11% foreign portfolio investment. So that shows us how not only retail investors see our market, but also foreign investors are more interested in market. And in coming weeks and in coming months, when we see other major drivers of the market, we'll most likely see increase in foreign portfolio investments in our markets.
So is this going to have an effect on the Naira? If we say foreign portfolio investments coming in, the rates are going up in terms of the foreign reserves, does this have an impact on the Naira? Naira has been very, very stable of recent. I think from 13.5 to about 1400. It's just been that band, being stable. Is this stability going to continue as long as foreign capital is going to come in?
Yes, and also no. So basically, the idea around that is that not only the foreign portfolio investments drive Naira appreciation, right? Currently, the geopolitical tension in the world will also be a driver because Nigeria is an energy-driven economy, whereby when we are getting more foreign portfolio investments and through foreign portfolio investments, and also revenue from oil production. But on the other hand, it's also affecting our economy from transportation, inflation driving into majorly every sector in the market. So basically, it's a balancing of position currently for us in the market.
Gotcha. So I've got more slides to go to. Let me just get Emmanuel. Emmanuel is here. I think it's. Do you have an early question before we go to the next slide, Emmanuel? Emmanuel? Okay. Let me move on to the next slide. Let's go to this slide that's talking about around asset class returns. So again, Nigeria's we've got the stock market, we've got the fixed income market, we've got the FX market, we've got the commodities and real estate. We want to just really spend some time and talk around these asset classes. This is where the money is going to, or where money is not going to, as it were. So let's just start with equities on a broad level. From January to this year, we've seen the market breaking records. Delivering performances that are new. The index has been broken. So what's the take for equities? We've seen what quarter one has done. What's your take for Q2, Q3, and for the whole year 2026 in terms of equities?
Thank you for that question. So basically, in the equities space, while we still expect the equities market to be very much bullish, however, positioning is what matters, and basically that's the idea around what we advise at Otto Stevens. So it's not just the equities market is overall bullish. However, you positioning in the right sectors would be a major determinant whether you are making returns or you're just investing. So outside, I think around last year, there are certain stocks or certain sectors in the markets where people invested and they had crazy returns of over 300%. However, they were not able to exit the position at the time where they wanted to exit. But there's this problem around liquidity. And our advisory at Otto Stevens is usually around not only having strong fundamentals, but also around the liquidity. So if you're entering an investment and it's not liquid for you, you can't exit at the time where you want to exit and all that, there's a very serious problem at that point.
So you're saying I can make money in the market on paper, but I can't get out, more or less?
Yes.
Interesting.
Yes.
So, I mean, do you have any examples that come to mind? Can you say that? Like stocks to avoid? I mean, what should I look out for? How do I spot the stocks that I can get in, but I can't get out? Is there something I'm looking at?
So basically, I always advise people, like I say, I always advise people to understand, lead to, depending on the knowledge of what you have in the market, or what you know in the market. So basically, your position as an investor, either as an active investor or a passive investor, right? So being an active investor, for you to decide you want to be an active investor, you need certain information. So things like profitability, past performance, earnings per share, things like quick things for you to quickly check before you decide to invest. So passive investors, I would say, from a passive investor's point of view, I would say reaching out to someone, an investment advisor, a stockbroking firm, or a securities advisor to put you in the right position, and also advise you on maybe a fund you can put your money into that fits your risk appetite and the return you're expecting. So, and that's broad view of what we do at Otto Stevens. So not only are we doing securities trading, but also asset management, where we are advising you on the funds for you to put your money into. So you asked me a question about a certain stock where a lot of people moved into. I think Elalix around last year, and I was trying to review the financial statements, trying to build a model around them, and I saw that the top line has been poor for a couple of years, and a lot of people kept investing, and at the point of exit, they couldn't exit the position at that time. So now there's a basic problem whereby you think, okay, this stock has done this YTD, but at the point of exit, no one is buying because other people that would want to exit that would want to enter that position don't see any reason for them to invest in that particular stock. So that brings a very serious problem.
This is the same stock company that did the public offer that no one bought. The offer was
Yes.
not, yeah. So what was the play out? Was it that people were buying on the public market and then didn't do the IPO, or what really happened with that IPO? Was it marketing? Because it's one of the first IPOs I've seen that really Nigerians didn't buy it. Nigerians invest in everything. Why didn't they invest in this IPO?
So I think the liquidity problem happened way before when they came out for the IPO.
Wow.
Um, so so people were already having issues around exiting their position.
Oh.
So I think also around the time where the stock was booming, it was basically driven by FOMO. So a lot of people didn't want to miss out on, this stock has done 10% today, it has done 20% tomorrow, and didn't really know like what was driving. So our own view is usually doing a top to bottom line review of a particular stock. So basically looking at the macros, how it drives into the sector and then into the stock before we say, go ahead to invest in it. So when we see any line not being okay, we would say this is not a stock for you to go into.
So if I understand what you're saying, people had bought the stock before, they couldn't get out. So when the IPO came, people were like, no, I'm not going to put my more money into the IPO.
Yes, they were less interested in. Yes, they were less interested in.
Okay, let me talk about a stock like let me talk about a stock like Bua Cement that is kind of doing pretty well. The fundamentals look good, the earnings look good, payout looks good, but only about 5% is in the market, right? So is that also is that 5%? Is there a rush for that 5% causing the price to go up, or is it just that people are okay with it's? What's your take on this very very limited amount of float in the market for a stock like that, and it's number 2 or 3 into the market cap in Nigeria?
So basically, from a market cap point of view, we notice that Bua Cement and cap stocks are usually in the hands, larger portion of those stocks are usually in the hands of institutional players, right?
Who don't sell? Who don't sell? Yeah.
Yes, who don't sell. So around the time when Pencom gave the go ahead for them to increase their equity exposure, we saw a lot of these names increasing position. A lot of markets, a lot of people were trying to buy more. A lot of institutional investors were trying to. So basically, around that time was the major driver, and also the strong earning. And being a company that enjoys the group structure, the group benefits, that was the driver for it.
Gotcha. Okay, we're going to come back to equities because the next slide is talking about you have specific equity sectors. Let's go to fixed income, treasury bills and bonds. Whenever I post on treasury bills in Nigeria or bonds, the response I always get is it's not beating inflation. It's not beating inflation. So I see you here saying fixed income. You are saying higher interest rates sustain attractive yields, making fixed income appealing for conservative investors. Is this still the position today in Nigeria that we're still going to have higher interest fixed income, even as we see MPR coming down? Or my question is more like, if I'm trying to do fixed income, is there a pathway for me in Nigeria to even beat inflation or to be near inflation in Nigeria for fixed income?
Yeah, so the first part of the question where we said would we still see elevated yields across federal government securities in the market? So basically, the idea around this is currently treasury bill in the market is going for about 16 to 18%, while that is around 26.5%. So the yields are still very much below. So I think what is actually driving this information on the market is basically anchoring buyers. So basically, we are coming from a period where yields on treasury bills and other federal government instruments were around 6 to 10%. So now you're having elevated yields because inflation went up and going into MPR going up and all that. So we are seeing a lot of people expecting this to continue on the back, and that's why restructuring your portfolio as the market goes is very much important. So as you see more liquidity in a particular asset class,
Yeah.
you you tend more to allocate your portfolio into that area.
Let me ask you a question. Oh, go ahead. Go ahead.
Yes, I think you asked the question about how can you make more
Yes, can I
returns
say,
on the
yeah,
fixed income.
correct.
So around going for, I think the Eurobond market has been very much productive and very much positive. I think because of its nature of both providing stable returns and also in terms of edging against inflation and the naira devaluation. So the interest and the appetite for the instrument and that has driven basically the interest in it.
Okay, let me ask you a question because the next slide here is the next line is foreign exchange, right? FX, the naira, and all that. Beginning of this year, or until late last year, beginning of this year, there was this trade that was happening in Nigeria where folks were selling the euro bond or selling dollars to buy Nigerian bonds because there was a calculation that the return, if you hold Nigerian instrument, the interest rate you get can compensate you for the exchange risk. So, for instance, I mean, if I have $1,000 in my DOM account and I'm earning 2-3% in dollars, I can sell my dollar, take a naira, buy bonds or buy Nigerian bonds or treasury bills or fixed income, and the return I make, even when I convert it back to dollars, that exchange rate risk is not as much as what I would make from if I took dollars and sold it. Is that still a trade that is out there? Are people still doing that, selling dollars to invest in Nigerian fixed income to go back? Is that something you're still seeing?
Yes, not just only the fixed income. We are seeing more activities also in the equity space, and this is we can also see the trend from the naira appreciation from about way above 1,500 to now about 1,365 thereabout. So the interest from investing. So basically, the trade-off of you investing in a currency edged instrument whereby the other currency you're trying to hedge against is appreciating. So, and then having a market whereby different asset classes and different investment products are becoming more bullish. So, seeing NGX doing about 52% last year, and now we are already at 57% at Q2. So basically, other than just investing in a particular instrument whereby the foreign exchange naira is appreciating against the dollar and missing out on the equity space in the Nigerian market.
So you're saying that folks are selling equities to buy, selling dollars to buy equities. Is that it? That's what you're saying?
Yes.
Okay, so interesting. So let's this past quarter, let's tie that back to remittances. I saw a report that about nearly 35% of Nigerian remittances come from the United Kingdom. So the bulk of our FPI that you've mentioned earlier, the foreign portfolio investment is coming. The bulk of it is coming from the United Kingdom in terms of solid number. So this money that's coming to Nigeria, right? Are you seeing it going to the equity market, the bond? Where is the money going to? Like when the UK guys bring their money in, are they just going to buy stocks? Is that what they're doing?
So it's spread across the board, not just the equities markets, but also the understanding of trading in a market that is exposed to a lot of risk in terms of inflation pressure, global political tension, and the likes. So basically, what I would do, or what any investor would do, is basically to spread their investment across different asset classes. So when the foreign portfolio investment is coming into Nigeria, they're not only investing in the equity market, but they are also hedging in other instruments, so as to have the balancing of from each market. So they don't want to lose on the equities markets, because we have seen increase in I think about 11% in the equity space from foreign portfolio investment, and also we are seeing increase in appetite for Eurobond instruments.
All right, let's move into commodities, right? So, if outside Nigeria, the play is pretty simple. Because of the war in Iran, the war in Ukraine, oil companies are making a killing. I just saw Shell report some crazy earnings. Exxon, Conoco, the same thing. Everybody's reporting crazy earnings. So I took a look at Nigerian companies in terms of just their profit. I'm looking at corn oil. Gross margin 7%. Compare that to just any bank. Any bank is nothing, right? You look at their pre-tax margin 0.84, net margin 0. These are all anemic numbers, and it's across the board for Nigeria. Look at Aradel, look at the rest, Etana. None is hitting 10%. So I know it's a dichotomy between upstream and downstream. But when we say commodities, oil and gas, and there's a disruption in the global economy that is causing energy price to go up. Is there an opportunity in Nigeria for an energy investor to look for a place to sort of take advantage of this, disruption in the global market, in say Nigerian stock market? Is there a place I can put money in and my money goes up as this prices oil is also going up?
So for a Nigerian investor, I think, like I mentioned before, you are looking at it not just from one sector. So basically, in terms of you trying to invest in Nigerian's marketplace, you are looking at the impact of investing in one sector and the impact of this in another sector. So basically, you're not just looking at making more returns in a particular sector. You're trying to reduce your exposure in sectors whereby they're very much affected by the commodity prices. So in terms of increase in importation of raw materials, imported inflations, and the likes. So we are also trying to edge in sectors that benefit from this global tension. So in terms of investing in the oil and gas space, and also from banking sectors. So those are the two sectors where I would say that there will be an increase in exposure and increase in investment opportunities for investors. So the banking and the oil and gas. Conversely, in terms of reducing exposure, so in terms of consumer goods and manufacturing goods. So basically, what we see now is Q2 running into Q3. We see a lot of pressure around those names in those sectors, because at the time where so the way they operate in the sense that raw materials are bought upfront before the period. So you see that they already incurred these high costs. So even before the moment, or before the quarter when these raw materials will be needed. So basically, the industrial, the manufacturing, the consumer goods would be affected. However, these companies have been able to edge against tensions like this by sourcing for raw materials locally. So having trade agreements with farmers and the like. So basically, they are reducing their exposure to importation of these raw materials, and having better relationship with local traders.
So when you say oil and gas, who are you referring to in the Nigerian market? Is it Seplat, or are there other players apart from Seplat?
So I would say majorly the sector would benefit in general from this. However, there are certain names whereby would enjoy the benefits of the US linked nature of oil, whereby names like Aradel and Seplat will most likely enjoy more benefit, because of how their revenue is.
What does that mean? Like, can you break that down for us? What does that mean?
Okay, so basically, these names majorly sell, and their profitability is driven more by the dollar than than the naira. So basically, in an economy whereby the dollar, which is priced, which is the major price end for this commodity,
Yeah.
we would see that yes. So basically, we would see that they would have more revenue at certain periods because of this geopolitical tension. So at that particular point, you would say, okay, moving into Q3, you would see more revenue because of this major, yes, this major change.
Okay, let's do the final one in terms of asset classes. We're going to go into individual equities next slide, but the final one is going to be real estate. What's the real estate play in Nigeria right now? Is it to buy land? Is it to buy, build and sell? Is it to buy, build and rent? I mean, these are the three things you can do with real estate in Nigeria, right? What's the smart money doing? If I'm a guy in the UK, I have $1 million, I want to come to Nigeria, maybe Lagos to invest. Am I buying land just to lock it up and sell tomorrow? Am I actually trying to build, to rent, or to sell off? What's the smart money doing?
Okay, so it's the deciding factor would be on your expectation. So basically, every investment is based off the expectation of the investor. So in terms of your liquidity expectation, right? So keying into certain investments in that particular asset class would determine will determine whether you'd buy and sell later. If you just buy and later on expect certain return, or basically just invest in a particular segment of the real estate sector. So basically, what I would do as an investor is to not only buy in areas where we see very much potential for capital appreciation, but also invest in the spike. So basically, we are seeing a spike in the interest of short-let apartments and the likes around certain regions like Yaba, Surulere, and the likes. So me as an investor would be looking to invest in properties around that area, whereby I can not only will I get capital appreciation, but also consistently get rental income at premium price. Okay.
I mean, I see many people. I know 30 December is coming. It's already bought up. Right? My friend tried to get an apartment in December. There's no more in December. But as of today, those things actually making money today. Do you think they have enough, rental income to sustain the You've taken out property off market. You said you're just going to do short let. It's off market for long term rental, 2-3 years in Nigeria. Are they actually making money as at maybe today in May, or are they just going to waiting for December to clean up the lost revenue, if you want to call it that? What do you think?
Well, I think it's a build up of the way the market is structured.
Yeah.
So we are seeing increase in expectation of the short-let market. However, the available short-let products in the market can't cater for the available short-let investment. So basically, we are seeing more demand rather than more supply for the short-let business. So basically, what we'd see is, even if we don't have spike periods like the December, but we are still seeing profitability in those in the short-let business. So not only are you investing in the short-let business, but you are also looking at investing in areas whereby you enjoy benefits like capital appreciation, and also in terms of agricultural produce. So we are seeing investment whereby you buy into real estate products whereby you get capital appreciation from the land, also in terms of farming on those lands and getting returns even before you decide to sell off that investment. So diversifying in the real estate business will also be a key player. So you're not just saying, oh, okay, I'm going for short let alone. You are diversifying in different locations whereby different drivers ensures that you have better profitability, overall profitability for you as an investor.
Yeah, so we're going to go into the top profitability stocks and sectors next. But let me just ask you a question in terms of the tax law. The tax law is saying that if you earn money abroad, right, it's tax free in Nigeria. So if I invest abroad and I bring the money back to Nigeria, it's tax free. If I earn money in Nigeria from buying individual stocks, not mutual fund, individual stocks, I pay tax. Do you think that would have an impact on the way Nigerians invest? Do you think just because there's a tax-free income if I revert money back to Nigeria, it would change anything in the way Nigerians invest? Have you seen anything, or do you think that's going to be a factor going forward?
Yes, I think we've seen the impact around Q3 2025, whereby we saw that a lot of investors misinterpreted the tax law in terms of exiting certain positions, thinking that the capital gain tax would significantly affect their investments. However, it's if you are paying more tax in an economy whereby you are getting premium returns. So, as an investor, you understand that this is the trade-off in playing in a particular market. And also, you're not only making a trade-off, you're also structuring your investments both in terms of entry and exit. So, in terms of, okay, at a particular time, you are trying to reduce your tax liability in a so basically, you are doing tax planning. So, in terms of scheduling your exits in certain investments to reduce your overall tax base.
All right, understood. So, guys, we're talking Q1 review for Nigeria. We've done the macro, we've done the sectors that we think you should watch in. We're going into the individual stocks. We're going to name individual stocks, ask our experts on ground, a head of research, so he knows this stuff. Where should we be investing? What are the opportunities out there? We're going to name specific stocks. If you have a question, of course, you can request to speak, and I'll add you to ask your question as we go along. So it's kind of more, you can ask your question. You have to wait till the very end. So that way, if you have something on your chest, you can ask, and we can let you speak, get out of your chest. So we have a new slide here, top performing sectors and stocks. We're going to start from banking. So banking last week, the rate was all about banking, right? Most of the three top 5 banking stocks brought the results out. The results are now out. We've seen mixed bag. I think the earnings were good. UBA came out and said no dividends, and that affected the market significantly. So we also analyzed if that no dividend policy was good or bad, and we explained it in a bit, right? But what's your view on banking, the banking subsector in Nigeria? And I see you guys have Zenith, GT, UBA, ATI, and Fidelity as your marquee banking stocks there. But what's your view on the banking sector in Nigeria? They've raised capital, which means they have a lot of cash. Are they able to deploy that cash in an economy like Nigeria, where everyone is complaining about low capacity utilization, low consumption? What's your take?
Basically, the sector, our own belief is that this sector is, and majority of the stocks in these sectors are currently undervalued, right? And we see that in coming months and coming years, we see more potential from these names, right? So the expectation of seeing the likes of Zenith listing on other exchanges aside Nigeria, GT listing on the London Stock Exchange. So things are around that has been a major driver for the sector. So both playing around over 100 naira currently, and we are seeing a lot of liquidity in that space, and a lot of investors positioning for better profitability in coming months and coming quarters.
So just a question: if they list in the UK and the US, that brings more money to the stockbrokers, right? To the holders, not to the bank. It goes to me, right? If I own a share in Zenith, and Zenith lists
Sorry, I
it.
think
So I'm asking, right, just to clarify, if I own a share of Zenith Bank and Zenith Bank goes and lists its shares in the London Stock Exchange, the trading, the funds, the upswing in the trading comes back to me, not to Zenith, right? They're not creating new shares. They are listing already. Are they going to create new shares to list in London? Or is it what shares are going to be in London? That's the question I'm asking.
they're increasing the access to investment in the share. So basically, if
So
we
they're,
currently
they're not going to issue new shares, right? It's the existing shares they're going to offer in the UK, right? That's what I'm trying to get at.
yes, unless if they decide later on that there's going to be there are going to be new issues of new shares.
Okay.
So for an investor, what this means is that for most likely for a sector and for certain names that have strong potential that are pretty much undervalued. It means that there will be more demand for the shares that are currently owed. So that provides liquidity for me as an investor. Meaning, okay, more demand for what I currently owed, and it pays. And we can see that from Q4 2025, whereby GT was playing around 90, 92 before the listing, and currently it's above 120. So we can see that in that number also.
Okay, so just to be clear, I know I'm asking this question. So if I hold a share of GT in Nigeria and GT lists the shares in London, what happens is that the folks in London can buy shares of GT in London. So if the share price goes up in London because of arbitrage, because the market doesn't like arbitrage, my shares will also go up to nullify the arbitrage that has occurred in the UK, right? So in essence, my own holdings, the price of my holdings go up to compensate or to match what's happening in London. Am I on the right track?
Yes, you are.
Okay, so that's why it's net positive for, like you said, when you mentioned Zenith and GT are going to list, that's why you say it's net positive for those stocks.
Yes.
Okay, fantastic. What about Eti? They are in West Africa, all over the place, Fidelity. What's your take on those two? Why are they on your list for ETI and for Fidelity?
So they're on the list because they're part of the top performing stocks in that particular sector for the period, right? While we are still looking at their figures, we are still very much heavy on the Zenith, the GTCO, and currently reducing position and also maintaining a stable exposure to the likes of Fidelity. You're not seeing very much liquidity in that name, UBA and the like. So seeing moving from 52 to 40 naira because of the sentiment around investors wanting stocks that give dividend, and you have seen that impact that stock playing around 40 naira now. So we are still very much cautious in those names, but we have more exposure to the likes of Zenith and GTCO.
Okay, question for you. Do you think Nigerians are moved by the dividend announcement, or are they moved by the dividend yield? Because why I'm asking this question is that, I looked at the market now. Access is having the highest dividend yield in Nigeria, 10.59. But I'm not sure Nigerians go back and say, oh, they paid this dividend, hence this dividend yield is going to be higher than a Fidelity Bank and GT Bank. GT Bank's dividend yield is about 8.86. Access Bank is about 10, nearly 10.6. But in terms of the naira paid, it's different. Do you think Nigerians are able to link that dividend yield, or do you just stop at, like you said, dividend and bonus? What's your take on the psychology of the Nigerian investor?
I think investors are majorly driven by the dividend rather than the dividend yield on those names. Yeah. So basically, they are more concerned about, okay, even if they are not getting like significant return on it. They are still getting dividend regardless. So yeah, we understand that we are moving from a period where we have increase in interest income because of the increase in rates and the likes. So to a period where we saw stability in the rates. However, there's still the expectation because of the size and because of the valuation of a particular stock, like the UBA, to still pay dividend regardless. So a lot of people exiting that because a lot of investors were expecting that, okay, after dividend they will exit the position, but when there was no dividend, they had to just move their funds to some other other performance.
Very interesting. So Zenith Bank this year is doing 100%. Zenith Bank this year 100% performance. GT is doing 58. Fidelity is doing 13. Access is doing 7. But if you look at the dividend yield, Access Bank has the highest dividend yield amongst all these banks that I've mentioned. So that's quite interesting to see that Nigerians are more, like you said, are driven by the announcement of the bonus shares and the dividend, the Naira and Kobo, than the actual yield percentages. Very interesting. Any other comments on banking? Because that's where most of the liquidity is in Nigeria. Banking, you can buy a banking share, you can sell a banking share. What about the guys that are in the, should we say, the tier 2? Is that a word to use for those guys in the tier 2? The WEMAs, all these guys that are just really, WEMA was the best performing bank in Nigeria last year, right? For the NGX 30, if you look at the NGX 30. What are those guys doing that? Is anyone there on your radar? Hello?
Hello, sorry, I didn't get that. Sorry.
I was just asking in terms of those banks on the, should we say, not on the Fugans, not the big banks that are highly capped, the mid and lower cap banks, if we call them that. Is there any bank in that sector that you are watching that you think we should put our eyes on? Not the Zenith, GT, and UBA. Is there any other bank in that second tier that we should keep our eye on for busting out growth, as it were?
Yeah.
I think I lost him, so I'm just going to ask him to come back in. I lost him a bit. All right, guys, so if you guys have any questions, this is the time to ask before our guests come back in. Again, he's taking us through the macro, he's taking us through the sectors to watch. We're on the banking stocks, and we're just going through them. So you remember what I said last week, guys. If you want the best predictor of if a stock price is going to go up, is going to be earnings, the earnings of a company. So if the earnings go up, the share price will eventually catch up with the earnings. Well, folks don't really look at the earnings, look at the price. If you're looking at the price, you are looking at you're looking at the effect, not the cause. As an investor, you should be looking at the cause, right? So one way for you to trade is to try to look at the earnings. If you watch Bloomberg, you watch most of these financial shows, they will always talk about the earnings of the company. Last week we were talking about earnings season. You don't hear them talking about price season. They don't look, the earnings drive the prices. So for you, same thing. Try to focus on the earnings. If the earnings are going to go up, then the price will match up with the earnings. Same way, if earnings start to go down, the price will also match up with the earnings. So keep that in mind. But earnings are like, if you want to look at it in terms of timings, you're mid to long term, right? What I mean long term, like a year. But what do you look at today to know if your share is going to go up and down? It's going to be that volume. That's what the analyst from Arthur Smith was saying. When he was saying that banking stocks, you can get in, but you can't get out. It's the volume. So you have a banking stock going up by 5 naira every month. Sure, you can get in. But when you get in, because the volume is so little, you want to sell, you can't sell. So you are making paper profits, but you can't get out, right? So you got to watch the volume that is being traded. And again, we'll have this information now on our app. So you can go into the app, you can look at the traded volume for the week, for the month, for the quarter, even for the year. And then find out what the traded volume was for that last week. So that will give you an idea. Listen, if I'm buying this stock at this price today, am I buying a falling knife, which means the share price volume is falling? The price can be going up and the volume can be going down. If that's happening and you're buying that kind of a stock, all things being equal, the price will eventually go down. Let me say it again. The price can be going up and the volume being purchased is going down. If you're buying that kind of a stock, eventually the price is going to follow the volume down because there's nothing holding up that stock. Nothing, you know. So earnings and volume should be your friend. We don't talk about it a lot. We talk about the dividends, talk about bonus, we talk about earnings, but we don't talk about earnings and the rest. So let that be your friend, right? That's one thing you want to take from this. We have Otto Stevens back. Hey, Otto, hi, welcome back.
Thank you. Sorry for the breaking connection.
Not a problem. Yeah, I think we've done through banking. Let's go through oil and gas. Again, guys, if you have a question, just ask. I'm going to insert you. He's here. So he can basically answer your questions. Let's go to oil and gas. I see oil and gas. I see Aradel. I see Seplat. I see Owando. Owando. Why do you like Owando? Owando has should we say quote unquote legacy problems. What are you seeing in Owando?
So I think from the names, they are basically names that have driven the sector as a whole, right? The likes of Aradel, Seplat having strong profitability and being giving this edge to because of the nature of having um, a dollar pricing into them and edging against foreign exchange losses and the likes. So Rwanda on the other end is enjoying the benefit of a sector that is performing. So when people are investing, they're not just looking at those two names, they're also looking at increasing their exposure in other
Yeah.
names. And basically, from market sentiment, whereby we are seeing a lot of activities around the name, a lot of people would want to invest rather than just looking at the profitability over the year, the figures around the year. So basically, they believe that in coming months, because of the geopolitical tension, we would see more liquidity in that name. We've seen a lot of people get invested in Coiner also.
So it's more like it's a play for price appreciation. If I hear you, because 2 years ago, 1 year ago, nobody was buying Owando. Now I see the share price just went through the moon. So this is more like a price appreciation play. If I'm on the right.
Yeah, yes, you are. Yes,
Okay, okay. So what's good? Aradel also on that good one there. Aradel, what are we seeing there? That's downstream. Are we buying these stocks? I know Seplat is upstream, downstream. When we say Aradel, are we buying it because PMS price is going to go up and we're looking at earnings from that, or what are we buying when we buy a local PMS distributor like Aradel, like Eterna? What are we actually buying? What are we seeing when we buy those stocks?
So basically, we're not just buying because of the current tension. We're looking at their fundamentals, right? We're looking at the performance over a period, their projections, their expectations. However, like I mentioned before, exit and entry position matters very much important for retail investors, because at the time where you decide to buy into an investment, or let's say this name,
Yeah.
it might come the time where a lot of institutional players and other investors are trying to rebalance their portfolio. So at that time, you entering at about 2,000 or above that, and a lot of people are selling off. Now you are seeing you are seeing the share price coming down.
Yeah.
So you most likely believe that is there something happening in this particular stock? Why are people exiting, right? And like I always say, whenever there is profit taking, it gives opportunity for new investors to price in a particular strong fundamental stock.
Is there a place as an investor, average guy like me, I can go to and see that PFAs are buying or selling? How do I know PFAs are buying or selling? Just I'm a not simple guy. I want to buy Dangote. I don't know if PFAs are buying or is there a place I can see it?
So I don't think that there's a particular place where you can see where institutional investors are currently
buying.
investing in. However, like based on sentiment, we understand that a lot of these large cap names are majorly invested, and names with very strong fundamentals because of the nature and the regulations around the pension industry and the likes. They are usually invested in names with very strong fundamentals, and majorly most of the time, they are also names that are in the NGX 30, which is an index that tracks top 30 stocks by capitalization. So basically, in those names, you as an investor can also follow through with the trend of those names. However, in terms of your portfolio allocation, your allocation across different sectors in those names would significantly matter in the return expectation and how much return you can make from the markets.
All right, let's move to the big boys, the industrial goods. That was the sleeping sector. Now we have Dangote, we have BUA, we have WAPCO. What's happening in that sector? Cement is very, very, very expensive. Very, very expensive. Is that expensive in quotes showing up in the earnings and showing up in the returns of Dangote Cement and BUA? Is that what we're buying?
Yes, it is. Also, you've been able to see these names being a major determinant of how the market moves, how the sector moves as a whole.
Yeah.
So, because of the pricing power of these names, so basically they've been able to maintain a consistent profitability because of the pricing power they have, right? And also in terms of trying to reduce their bottom line figures in terms of reducing foreign exchange exposures and the likes. So basically, that has been the driver around those names.
Yeah, in terms of stock price, it's up. BUA Cement nearly 137%, 139% up this year. The market is doing about 60%. So BUA is beating the market just in terms of raw performance. So again, if the price of cement goes up, we're seeing a direct linkage with that price and the stock price. That was happening. There is no other pass through. If the price of cement goes up, the share price responds. Is that a correct statement to make?
Not necessarily does the increase in price of cement flowing into the share price going up. They're directly correlated, right? However, from the reporting of their financials, right, reporting more profitability, it will flow through into having a better share price for those for those names. So basically, not the price of cement exactly driving the share price, but the profitability of the company as a whole, maintaining both the top line and bottom line into driving profitability for the organization as a whole.
Yeah, but if we Otto, I see you're going to have you in to ask your question. But again, if you make that argument again, if the share price goes up, that drives profitability. Or these guys are installing gas, so they install gas, costs go down, but still the price of cement going up is revenue. Revenue less cost is going to be profitability, and then we then get the dividends, and that's pushing up the price of BUA, of Dangote, of WAPCO. Again, is that a correct statement? All things being equal. Arthur, do you hear me?
Sorry, I didn't get that. Sorry.
Yeah, I was just trying to make the point that literally, again, if the price at the market stalls of cement goes up, that means the earnings is increasing. If earnings are increasing, that should then translate to profits, to dividends, and to share price. So I'm saying, is that pass-through really, really direct, that share prices of BUA go up because the cement price of BUA has gone up? Is that a direct relationship? Can we make that argument?
It has a direct relationship with the top line. However, with the bottom line, in terms of managing foreign exchange exposures and every other cost in the bottom line, would determine whether these names would be profitable as a whole. So yes, their revenue might be increasing, however, but their bottom line can still very much be reducing, and then seeing less profitability in those names.
Understood. We're going to go to MTN next. Let's get Otto. Otto, I've got Otto LRV Consult. How you doing, sir? OTO LRV Concept. Can you hear me? You've got the mic. Go ahead.
Yeah, hello. Can you hear me now?
Yes, I can. Good day.
All right. Thanks, Mr. Carlo and Otto. Yeah, I just want to throw some questions. In relation to dividends and bonus shares, I see a negative relationship in terms of the actual share price whenever dividends and bonus shares are announced. I also want to know, when these bonus shares are announced, is there a timeline for the bonus shares to be released? Because from today's topic, we've seen sentiment. Because the announcement of bonus shares crashes the share price seriously.
Yeah.
And that negative sentiment starts immediately, being on the red. So when do we get this bonus? And also, when shares, IPOs are being made, there's always a timeline open from, say, January 1st to January 31st. But after the payment, after we bought the shares, we don't know when the shares come, actually. The shares allocation usually takes a lot of time. Is there no timeline for shares allocation?
This man,
And, I want to ask
you are firing missiles. You're using style to fire missiles.
Sorry, sir. Okay, one last question. I would like to know the actual difference between NGX Group and the SEC. I think I'll rest with that for now. Thank you very much.
Yeah. Before Otto Stevens answers, maybe it might be an answer to your first question, where you said that there's a relation negative between the share price and dividend announced. So it's not really a negative relationship, but if you have a share price, just giving you examples, if you have a stock that is priced at 1 naira, and normally you issue maybe dividends of 50 kobo, right? Normally, just example, not exact. Normally, the share price should go down. Let's say issue bonus. Bonus is a better example. You have a share price of 1 naira. You issue 1-for-1 bonus. The share price should go down to 50 kobo because you have issued a bonus, 1-for-1. So because you issued a bonus, you have to reduce that bonus from the price of the market. So the market will now go down by what you are paying. And remember, bonus is like a type of dividend. Same way when you do dividends, the price should also come down in respect to dividends you have issued. Let me give you a story. We used to trade back then in Nigeria off dividend and bonus announcements. And this was psychology. Pick a stock. Let's just say you pick Zenith Bank. Zenith Bank is trading at 100 naira a share. If Zenith Bank does a 1-for-1 share, right? There's an anchoring. Nigerians look at the paper, they see Zenith Bank 100. Example, Zenith Bank 100 today. Every day, Zenith Bank 100. Then because Zenith Bank does a 1-for-1 bonus, what happens to the share price of Zenith? It goes down to 50 naira. From 100 naira to 50 naira. Remember, on the market, the share price has gone down, but you don't yet have that, like you're talking about, share certificates out. So what do you think Nigerians will do? And when I mean Nigerians, just in the market, they will start to buy that share of Zenith at 50 naira because the perception is that it is cheaper. It has gone from 100 to 50, which is wrong because the same stock. They've just increased the volume or number of issued shares. So they've adjusted the price from 1 naira or from 100 naira to 50. But the average man on the street does not know that. For him, this is the same Zenith he saw last week at 100 naira. It's now at 50 naira. So he starts to buy. So what you then see is that post bonus or post dividends, the share price then goes right back up because people have bought those shares at a discount. They are buying at an expensive price, right? And if you trade on that, you can make a lot of money because you can say, oh, when they announce a bonus, the share price is going to go down. When the share price goes down, it's going to go back up again because people are going to buy thinking that it's cheap. So it answers your first question. It's not a negative relation. It's just math. If you pay something out, you have to go back and adjust the price to compensate for the bonus and for the share price you have paid out of. That's why it's going down. So it's not. I won't say it's negative. I would just say it's a corresponding adjustment of the share price to take into account the bonus and but that's what I would say it is. Not negative, but that's the way you have to do it. And it's everywhere. America, UK, Nigeria. That's basically how shares work. I don't know if Otto Stevens has anything to add to that answer.
I think you've explained it amazingly. So basically, the concept is around marking down of the share price to take out the effect of dividend payments. So, right, you as an investor, you're not serious affected by this, and this majorly means that new investors are not taking advantage of returns that already benefited the present investors. So basically, you as an investor, you've waited for a period till the date of dividend payment, right? And at that point, it's around 102 or 105.
Yeah.
Now, after the markdown period, new investors coming in to buy that stock are not benefiting from that increment in the share price. So basically, you are taking out the effect of dividend payment and bonus shares
out of it.
So you're not using as an investor, an existing investor.
But people don't know this. That's the thing. People don't know this. So the trade back then was to go and take leverage and buy the share price after the bonus is issued. Because when it gets to that 50 naira, there will be a big rush. People will say, wow, this bank is 50 naira. It used to be 100 naira yesterday. That means the share price came down. It's at a discount. So people rush and buy. And if you use leverage, just the price going from that 50 to even 70 is enough for you. Because you know that price hike is artificial. It's not real. It's because people think it's a discounted stock, but it's not. It's just a stock ex-div. But if you buy at 100, you are buying that stock cum div. If that's really what's going on. That's why I was saying trading strategy auto. But I think you want to answer Otto's question. He's saying for IPO timelines, like Dangote is coming. Everybody wants to buy Dangote. My friend said he wants to buy Dangote and quickly sell because people are going to be rushing for the share price. So Otto is asking, is there no time frame between when IPO ends, then you get your, because you're going to get the paper certificate, or is it just going to go to CSCS direct and then you can say you want to buy and sell? Are there timelines set up for this?
Usually timelines for this type of investment, right? Yeah. So as compared to the likes of saying, okay, there's a right issue or there's a public offer or a company that already has a stock listed on the exchange, right? Mm-hmm. So it's not that other people are taking advantage of this stock being on the exchange by buying at a lower price before the right issue is listed on the exchange. So basically, you as an investor buying into the IPO, you are not losing, right? The only issue would be around liquidity around that period of time. So there's usually a time frame for that is announced by the company that within the next 20 to 20 something days, this is when we're going to by giving investors the opportunity to invest in this venture, right? So after that period, there's a funding date whereby everyone that has invested, it is credited through the CSCS account and listed on the exchange for you as an investor to now start trading on the stock that you've bought. So between that period, it's not like after a particular period, there's no particular time frame for the IPO. There's usually a timeline, and in some cases you might even see an extension or possibly because of the nature of certain companies that are doing an IPO, you see them reaching the funding amounts very fast. So that's why currently we're advising clients that are are interested in this IPO to start getting their informations and everything possible, everything they need before the IPO. So in terms of confirming your CSS account, if you don't have CSS, reach out to a stockbroking firm that can help you with the process, and not waiting till that time where Dangote IPO is tomorrow. You start looking for how to get your CSS account at that time.
Gotcha.
Other people already invested in that opportunity.
Yeah, but just a question was, as regards Dangote IPO, when I bought MTN, I didn't get certificate. It just went straight to my CSCS. So is that what they're going to do with Dangote, that you can buy and it just goes straight to your CSCS? Do you have any insight on that? Okay.
Yes. So that's basically how it is. We have moved from a period whereby you are issued a certificate whereby you invest, you go to the bank to buy shares and you are given a certificate, things like that. So we have moved to a more detailized structure whereby you buy and it's automatically after the funding date and the likes and the listing date, you see it on your CSS account, and then you can trade in the secondary market.
Fantastic. So that's going to make it a lot easier for people to just, if they want to sell, to then exit and all that. So interesting call. And he had the last question. He was talking about the difference between NGX and SEC. That's an easy one. I think NGX SEC is the regulator, and NGX is a what do you guys call yourself? Self-governing or self-regulatory agency? Is that what you guys call yourself? NGX? Self-regulatory?
Yes, self-regulatory exchange. So basically, these names are what we call financial infrastructures, whereby they have different roles and different responsibilities, right? So being SEC having the responsibility of regulatory of the capital market as a whole, then the NGX being a self-regulatory organization providing regulatory across the Nigerian Stock Exchange, Nigerian real estate, and the likes. So NGX Group as a whole has different components under different subsidiaries under it. So the NGX I feel would most likely be acting is the exchange that provides a secondary market, a market for investors to buy into opportunities and exit opportunities. So basically, that's the arm of NGX Group that provides that such opportunity. So the Nigerian Stock Exchange, the Nigerian Exchange Limited.
Gotcha. So I think we answered all three of Otto's questions. So fantastic.
Thank you very much.
All right, fantastic. Okay, so let's go into we stopped at telecom. Telecom is very easy. Telecom, Airtel. I'm not sure if we still have Glo, or Glo is not quoted. So MTN, Airtel. What's the take on these two guys? They are highly capped. They tend to pay a decent amount of dividends. MTN just sold Momo back to the South Africans. That tells me that they think it's very, very valuable, and the South African guys want to have a foothold in that in Nigeria. I'm not sure what xenophobia issues will have with it. I'm not sure how serious the Nigerian Senate is with punishing MTN for what's happening in South Africa. These two companies are solid. They are solid. You should have them in your portfolio, I would say. At least have one in your portfolio. But do you see, is there a space for Airtel to catch up with what's happening, unfortunate events that happen in South Africa? Do you see anything happening with Airtel, MTN, in terms of their rank in Nigeria?
I don't think it will be a significant driver. As what we are seeing in MTN has majorly been around the strong fundamentals and basically moving from a period of loss reporting to a period of profitability and then currently paying dividend. So majorly the benefits the sector is enjoying is the need that comes with the business model of the company. So in terms of, regardless of whatever area you say you want to invest in under the company. So basically, you see either through data or through more calls and the likes, you'll still be in a company like that. So basically, even the advisory as a whole, you would say invest in companies that have a very strong going concern in terms of investors would readily expect that these companies will continue to perform, these companies will continue to operate. And that's why we have seen that even after a loss reporting period for MTN, they've come back with a very strong performance and then are also paying a dividend to invest.
So I'm just looking at their numbers here. Dividend of 20 naira, but that's very, very low because the yield is about 2.5. If you look at their total return for the year, about 54%. Let me see. Their performance for the year is about 56% for the year, all in. So it's a tidy company. Like I said, something you want to have in your portfolio, but you have to be careful why you are holding it. If you are holding it for returns, i.e. income, I don't think it pays you enough income. That 29 is just 2% in terms of return of a yield. The banks are way, way better. But in terms of just stability in your portfolio and appreciation, this looks like your guy to have. What about Airtel? Do you see anything in Airtel?
Basically, so let me still say one or two on the MTN before I move to
Yeah, go for it.
So I think what we are missing is this is a company that is coming from a loss position, then back to profitability. So in most cases, the dividend payments won't be as significant as every other one, but this is for them to pay investors for believing that this company will continue to perform, this company will continue to return a very strong profitability. And we've also seen over the period of easing of the loss position, we've seen the share price move at a very significant amount. So basically seeing around 500 now to around 800, 900. So basically, you as an investor, you are not just investing for a particular purpose. So if you are looking at the dividend part, you say I've not made much return. However, in terms of capital appreciation, you have made significant return as an investor in this name. So the like of Airtel also has also been very, very strong. However, this is a stock that is significantly held by institutional players. So it's you won't see a lot of people say I have Airtel as compared to MTN because of the scarcity of the stock, and you may even go weeks whereby there are just bids, no offers over a long period of time where there are just bids, no offers for this particular stock. So, however, overall, I believe the sector as a whole is still very much profitable. I believe in the next coming quarters, we would see this name still giving significant returns.
Yeah, I hear you. PE 12%, kind of slightly expensive, but their debt is down. They used to borrow a lot from Nigeria. Their debt is down. And again, like I said, MTN is something you want to have in your portfolio, but just be careful. Be clear why you have it in your portfolio. I think that's the word. So yeah, with telecoms, let's come to consumer goods. This is the one that hits the economy clearly. We got Nestle, we got Bua Foods. I would lump in Lever. I would put maybe Okumo oil in there. These are all the things that we are buying day to day. The question for consumer goods is that Nigerians are not buying anything. Like with the consumer spending in Nigeria is very, very low. Now we have the double whammy of fuel prices going up, and of course we also have this issue of inflation coming down, but still up. Is the prices are going up slower, not that they're going down, right? So what's your take on? We've got Nestle. The narrative is going to be yes, they've turned the leaf around. They are making a loss, now making a profit. But what else are we seeing in Nestle, in Bua Foods? What are we looking for there?
The returns in the consumer goods currently year to date is around 10% thereabout. However, I think what we are excluding from this analysis is basically the returns from 2025. So basically, we saw a rebound in the sector as a whole in 2025, and I think currently at half year, the sector was the most performing sector, returning about 60%, right? So basically, the driver for the economy has been around adjustments around exposure to the foreign exchange, which was a major determinant of its profitability. So we're having a strong top line. However, the bottom line has been eroded because of the foreign exchange. So basically, rather than increasing exposure to foreign exchange, what majority of these companies have done is to have partnership with local investors, building more strategies into their play, like buying upfront in moments whereby or in periods whereby we have lower foreign lower foreign exchange prices to a period whereby we have an hike in foreign exchange. So basically, you're buying at a lower price and then selling at a price at a later date whereby these figures have been eroded. So basically, it has come around restructuring as a whole, right? It has come around managing their bottom line.
Yeah.
It has also, you made mention about we are not seeing consumers
spending. Yeah, consumer spending is very, very low.
So I think another area whereby they've been able to maintain this profitability has been around product development. So they are not, consumers are not increasing their product in their consumption. However, we are seeing these commodities being unitized. So we are seeing smaller sachet of these commodities being sold.
Yeah.
So consumers will continue to patronize these names.
So I was just interested that Unilever did a lot of restructuring, cut down a few brands, the share price has gone up. Same thing with, what's their name? The guys that do customs, PZ. PZs were going to leave Nigeria, have stayed back, cut down a few brands, price have gone up. Are the investors reacting to the cutting of sales, of cutting of the dead fat in the company, and the company being leaner and able to then use those revenues it makes to service very lower cost of doing business? Is that, again, what's happening? Or are these companies actually doing organic sales, which is then reflecting in the return? My question again is just to be clear. I'm asking, are they making the profit because they are cutting cost or they are making a lot of revenue? That's where I'm going to with that question.
So they are not only cutting costs, but they are also restructuring as a whole. They are also restructuring as a whole. Not they are significantly making more revenue. They are making revenue. They are able to maintain a stable revenue in terms of product development. But they are also like restructuring as a whole and also reducing their bottom line figures.
Okay, not to put you on the spot, there's a company I just want to ask you about. If you don't know the stock, it's fair, it's fantastic. Don't really have to answer. It's Zix. It's as in ZICHIS, Zix Agro Allied Industries. Do you know about those guys? Zix Agro Allied. Does it ring a bell?
Yes.
What do they do?
So they are an agricultural and so basically we have a chain of different agricultural investments and farms and the likes. So basically currently I think we are still on the watchdog position whereby we are still looking at the company as a whole.
Yeah.
Because seeing a lot of movements in the stock and we are not yet positive on investors playing in that particular name until we are really solid on.
Do you know, the company this year to date has done 3,252%. Let me say it again, 3,252. Guys, I'm not asking to go and buy. I'm just asking a question. Like, they do almost the same thing Ella Lakes was doing, right? Isn't that what they were doing? The same sort of agro-allied farm. Ella was doing more of cash cropping, right? They are doing like eggs, like day-to-day agricultural produce, eggs. I mean, I'm really curious how this company can make they produce eggs, fresh fruit palm, oil palm, vegetable oil. It's almost the same thing that Ella was doing. So how come the market likes this guy but didn't like Ella?
I think the available information and also the momentum around when it came into the market. So I think around the first week, it did about 60%.
Wow.
And I think after a couple more days, the exchange had to suspend and also review their financials. So investments in that name won't significantly expose investors to a larger risk. So, but currently, we are still in the review period whereby we are still looking for both short-term and long-term investors. Yeah.
So be careful, more or less. I hear you say, hey guys, do your due diligence properly on the stock. Yeah, it's just interesting. The dividend yield is not to write home about. It's less than 1. I don't think they've made a profit. So, but Nigerians are buying them to the tune of proving the stock price to 3,000, which goes back to the education and why you guys are here. Just to ask, why would you buy something? What's going on? Have they found gold on that land that we're not aware of? But it's just interesting that should happen. All right, so now let's come to your recommendations. Like you've come from the macro, we've gone to asset classes, you've gone to the individuals, you've done banks, energy, and the rest. What are your broad recommendations going forward? So Monday morning is going to be here pretty soon. As an investor, what should I be looking at as an investor if I want to approach investing in Nigeria? What should be my take? You want to break it down to equities, fixed income, alternatives, and of course just a broad risk management. How should I approach investments? You've got the floor, sir.
Yes. Basically, my approach would be continued exposure, and I'd say even before continuing exposure, it would be a more structured risk management framework whereby we are looking at your portfolio as an investor. We are looking at names whereby you can possibly reduce exposure and take profits at the current position it is. Majorly considering when you entered when you entered this particular investment. So meaning if you've made over 50%, and I think it's basically a good time for you to take a little bit profit and reinvest in other names that you see very much potential in them. So for an investor, on the equity side, that's basically what I'll do. Increase my exposure to those names that still have very much potential into Q3 and the likes. And also for the fixed income space, because of the tension, the political tension, and the uncertainty around where interest rates would be and the likes, I'll still invest in the short to medium-term instruments in that space. For the alternatives, because of liquidity and liquidity requirements of investors, I won't say I'll go to anything above 10% of my total portfolio in that particular space, right? And I'd say overall, I'll do a 50% exposure to the equities markets, a 20% exposure into a 20 to 30% exposure into the fixed income markets, and then a 20% exposure into the alternatives.
So alternatives in this case is going to be stuff like, what would you call a good alternative in Nigeria? Are you saying Bitcoin or REITs? What are alternatives for you?
So I think the easiest and the most understandable alternative for a layman investor would be the real estate. So I would say in terms of REITs, but for more informed investors, I would say the likes of the private credits, infrastructures, and the likes. So, but for a layman investor, it should definitely be the REIT products and basically a little bit of infrastructural products, so infrastructural funds and REIT funds.
Okay, fantastic. Just to come back to the 20, you said 10% or 20% in each particular stock. Did you say 10 or 20? I mean, your allocation to the individual stocks, you are saying you want to allocate between 10 and 20. Was that 10 or 20? I just wanted to clarify. think I'm not sure if I lost him. All right, I'll just clarify. I want to ask him. I always hear this, people always ask me on DMs, how much should I allocate to Dangote? How much? And I think the answer is that you get a percentage amount and allocate it. Like it's whether it's Dangote or not, it's still your oil and gas sector, right? I know Dangote is really expanding to petrochemicals, so that company, according to Nigeria's classifications, is both an oil and gas company and it's also non-oil, because if he exports crude oil, that's oil. If he's exporting detergents, exporting polyethylene, that's non-oil. Already, Dangote, using urea fertilizer, is the largest non-oil exporter in Nigeria, even though he's doing that from the gas, that from urea, which is from oil fields. So it's a unique portfolio where you have, if you invest in that portfolio, you are getting exposure to oil and to non-oil, and you are also, I think, I don't want to talk more on this till I see it, but Dangote is saying that he's going to pay dividends in dollars. If he's going to pay dividends in dollars, then that means he's also going to be a hedge against the Naira, which means it's similar to us buying a Euro bond. So we don't look at it again just as traditional dividend yield in Naira, but we're going to say, wow, we're getting a stabilization of our Naira revenues. We're going to have a hedge, or should we say an alternative to Naira revenues. So that would increase, should we say, the positives of that stock, right? But again, we have to see the paperwork. It's not going to be cheap. We have to see the paperwork. But I would say keep some money aside. You can't ignore it. It's simply too large in terms of scale for you to ignore it. That's what I will say. So keep something aside for it, and then we should see where I'll go. We've lost our guy. It's still I can't add you, but if you can speak, go ahead. Add as a speaker. I added you. He's saying something and so something. If you can speak, that's fine. I'm not sure what's going on with the system, but we've lost our guest. He's going to come back in a sec. What you guys think of the presentation? Let me try to do a review of what we spoke to him about. We may have nearly an hour or so. Let me try to go back. We started off with Nigerian economy, and 3.1% growth looks good on paper. It's good, 3.1%, but Nigeria should be doing more. I think the IMF is projecting we're going to do 4%. That is much, much better, 4%. But what's our population growth in Nigeria? About 2.93%. And our population in Nigeria is very, very young. So we have a lot of young people. If you look at unemployment, which is very, very high in Nigeria, that tells that the economy has got to grow at a minimum number of 5 to 6 for us to have a net positive growth. If the economy grows at that 4 to 5%, then we're having spare capacity to then generate jobs for the millions of youths that are being born, leaving schools, and are currently unemployed. Remember, every year we add to the number. We've got to take those guys off the roster and increase this for the guys leaving school, leaving NYSC that are coming into the roster. So very important that the economy is growing much, much faster than the 4% or even the 6%. We should be growing the way Ethiopia, crazy, it's growing 8%, 9%. So there's spare capacity. So on that term, GDP growth, we've got to do more on that. Inflation rate is coming down. That's a positive, but it's coming down to 23. It should be coming down to 10, 8, 9, not coming down to 23, 24, and the rest. So inflation rate is up because of food. I don't think we have cracked the food problem. We are importing the food we are eating today. If you look at the food import, about 7 trillion. If you just Google food import in Nigeria, we are importing a lot because insecurity has stopped our farmers from going to the farm. So we can't stop the import of food. We cannot, because people will starve. But we've got to get the farms working. If the farms work, that's unemployment going down, and that's income being generated. So the most important sector in Nigeria is not even power. It's agriculture. We've got to go and fix agriculture. When we fix agriculture, number one, insecurity. Number two, value chain. So that when we're making rice in Kebbi, we can process that rice in Kebbi and send it to Lagos, Aba, Port Harcourt, where the markets are. That's how we grow the local economy. If you notice this week, China passed a new law that says if you are African, you can export your commodities to China without paying tariffs. It's not that much of a good... Look at what's going on here. China's exports are becoming expensive because of tariffs, because of high labor costs in China. So what have they done? They are giving a stimulus to Chinese importers. So if you import raw materials to China, you are not going to pay any tariff here from Africa. Why? Because they're going to take those goods and make finished products and export it. So it's a stimulus to Chinese importers. It's not anything about African solidarity. They are being businessmen. So what's the response from Africa? We can't be exporting raw cocoa or raw soybeans. We've got to either tell the Chinese to come to Africa and set up post-harvest processing in Africa so we can get a bit of the value added in Africa, create jobs in Africa, then export semi-produced goods, which means we are adding value. It's more expensive, but we are capturing the increase of cost before we take it out to China. If we keep on exporting raw cocoa, raw soybeans, we will never get wealthy. The value chain starts from processing, not from harvesting. Anybody can harvest, very few people can process. Yeah? So we've got to think like that as a continent and say we don't want to export raw agricultural goods, because if we can do that, we are fixing agriculture, we are fixing employment, and then if we are getting more people employed, we are fixing consumption. If we can fix consumption, we are fixing inflation. Nigeria's inflation is not monetary. It's not because people have too much money. It's things are not being produced. Rice is expensive, not because there's too much money chasing rice. No, it's because there's not enough rice. If there was rice everywhere in Nigeria, from Kebbi, from Abakaliki, from Lagos or farther, from Ogun, price of rice will not go up. Even if you have Naira everywhere, because there is rice available everywhere. Think back when you have harvest of mango in maybe Jos or onions in Jigawa. Is there inflation of mango or onions in Jigawa? No, because you have sufficient output. Hence, you're able to absorb inflation. So again, these four things we've said, they're pretty good for Nigeria, but we can do much, much better. Foreign reserves mean nothing if we are still importing goods at 1,300, right? We've got to convert foreign reserves to then infrastructure and the right. So that's what he has talked about, and I think we're on the right path in Nigeria. I'll say that we're on the right path, but we've got to translate these macros to actuals. Then he talked about equities. Market in Nigeria today is doing pretty well. Lots of money is leaving UK to Nigeria because returns to Nigeria are doing very, very well. So the bulk of our foreign direct investment, foreign portfolio investment, is coming from the UK, the US, and all that, because Nigeria is giving good returns. If you invest anything in Nigeria, because the scale you make in Nigeria is much more than any other African country. What I mean is this: if we input a transformer in Nigeria, the returns you get from that transformer working in Nigeria is more than maybe any country in the world. Why? We don't have transformers. If you take a brand new transformer to the United States of America, what are you going to really get? They already have power. So you're not going to have any marginal increase in productivity there because they already have transformers. But in Nigeria, we have massive swaths of the country that have not seen power or have epileptic power. So imagine if you simply allowed Nigeria to get full power. That would mean productivity will go up, cost of goods will come down. That's why equities, FDI, all these things matter. Fixed income, very, very low, not beating inflation, but it's not meant to beat inflation. You don't buy bonds because you want to beat inflation. It doesn't work that way. Same thing with foreign exchange. It's stable, which is good. We don't want weak or strong. We want stable, right? And stable means we want supply of forex coming in. So the more Nigeria sells crude oil, the more we're able to get supply of forex into the country, the more we're better. Commodities, we've seen our oil output 1.5 is nothing. With the war in Iran, we should be pumping at least 2 million so that we pay off our Eurobond debt. If we pay that Eurobond debt off, our budget crisis is more or less over. So we've got to focus on those things that are very, very important. Then he went to the individual stocks. For banking, he has Zenith, GTO. UBA, Eti, Fidelity. Apart from Fidelity, these are all your highly capped banking stocks. Remember we talked about Nigerian market. If you want fast growth in Nigeria, you want to buy the stocks that are in the NGX but are not the NGX 30. The high cap stocks don't grow as fast as the low cap stocks. So if you look at this banking list, Fidelity is going to grow faster than Zenith Bank. Wema Bank is going to grow faster than Zenith Bank and GTB. But if the market turns around, Wema and Fidelity will fall faster than Zenith and UBA because these banks are high caps, low caps. So keep that in mind. If you want high growth, small caps. If you want steady growth, large caps. You want to invest according to your objective. Don't chase returns. Invest according to your objective. Oil and gas, they put Aradel, Seplat. We ask the questions. Seplat has got that of downstream, upstream. Is in the UK. You can earn forex. You can also have a large cap Nigerian stock in the energy market. You are exposed to that. I like Seplat because you're exposed to both downstream and all that. But you're also getting that forex revenues. It's good, but watch the dividend yield not as high. Industrial goods, Dangote Cement, Bua Cement, you've got to be there somewhere because after you take away the food and education, people want to build a house. If you notice, we're building all our roads in Nigeria today with cement. So when I asked the analyst if we're buying cement, does it mean we are, should we say, investing in those companies? The answer is yes. So more cement roads means more profit for Dangote Cement and Bua. Then telecoms, MTN, Airtel, solid companies, you want to have it in your portfolio. Consumer goods, Nestle, we've turned the corner around. Bua Foods, massive presence in the food market. Then we finally ended up in the sentiment. I knew he was telling us that, listen, you want to invest and you want to have your allocations 10 or 20%, be very risk adverse. Don't overweight. Very, very important. Don't overweight in Nigeria. You want to be very nimble. Keep cash to take advantage of opportunities. And Otto Stevens is back here. Hey, sir, I'm trying to do a review of our session. I'm not sure if you have anything you want to add or you want to emphasize as we start to wind down the space.
Yeah, thank you. It's still basically, first of all, sorry for the break. I think the network has been really bad. Back to what you were saying. I think it still follows with the explanation you were making. So as regards risk management, and I think that's very much important for every investor, right? While we want more return to the market, we need to be very, very cautious in where we invest. We need to play in the right sectors that will give us these returns. And also, as a whole, we need to continuously rebalance our portfolios, reach out to advisors that will significantly assist us in our investment as a whole. So, and not just investing, but you're making the right decision as regards entry and exit of investments across traditional investment assets and alternative investment assets. So basically, you are taking opportunities in all markets and also understanding how to position properly, looking at investments from not just buying based on market momentum, market sentiment. You are looking at macro drivers falling into sectoral performance and profitability in certain names. So yes, that as a whole.
Fantastic. I got you. All right. So, thanks for the engagement. I think I've also learned a lot from this.
Sure.
Sorry, I was on mute. Sorry about that. All right, thanks for that, for those words. Like I said, it's a good engagement to have you guys in, just to take us through that milieu of the Nigerian economy and to link the macro to the individual stocks. So we want to think, there's a key word you said when you started, positioning. And that's a word that I think most retail investors don't do. They don't position. Positioning just means you see something's going to happen, or you anticipate something's going to happen. So you take your cash and you buy ahead of that thing that's going to happen. Usually, if you wait for a company to announce a profit or to announce a new initiative, you're already too late. But if you have a feeling, if you say, I think the Nigerian economy is going to go here or going to go there, or you say the government is going to spend money in this state or in this product, and you go take a position, the market catches up with you. That's how you make money. So you've got to ask yourself, okay, these companies that he has listed, what is going to make them make money this year? Is it going to be government policy or is it going to be individual spending? Why will these companies make money? Same thing, why will companies lose money? What's the substitute for these companies? If people can't afford MTN, where will they go to? Or if people want to afford MTN, how will they buy MTN? Where is MTN buying diesel from? We're talking about solar. Is any solar company, solar policy that you can then look at to invest in? You're doing your research, and when you find something that is good, you then allocate funds towards that sector. You position yourself in the pathway of success. So when that policy hits you, you're already in there at a cheaper price, and the market is filling up with you. But if you chase the market, you're already buying at market information plus. So your margins are a bit lower. So that's the word for today, right? Try to position yourself. Look at the market, watch shows like this, and hear what's happening in the market. So that way you can take position and take advantage of what's happening. Nigeria is the market seems to be booming, right? And we do have the inputs for consistent growth. We have energy, and we're out of the home use, so it's going to be a big factor for us. So that's the way it crumbles. Artisan, I just want to thank you for spending time with us today. It's been very enlightening and very enriching, and I hope you guys will come back when we call you. The time check is about an hour 45 minutes we spent talking. I appreciate you guys. Hope you'll come back when we call you.
Thank you for having us. I really appreciate this, and we are always open to enlightening the market on where to position, and also most importantly, advisory across not just on our securities end, but taking account of both active investors trading themselves and also passive investors buying into funds under different asset classes. So thank you for the opportunity, Carlo.
Yeah, and I did share the slides. I've got your Twitter handle and your website there. So if you go to on YouTube and on Twitter, your address is on the website. So if you guys want to reach out to Arthur Stevens, they're pretty good. I recommend them. I use them, as like I said, so you reach out to them and then they will take care of your investment needs. All right, folks, it's been a fantastic one. Thanks so much for being here today. We're going to be back here tomorrow. I want to do something else next week. Hopefully, if I can get our guys lined up, we'll talk about another type of investment next week. All to your benefit. That's what we do here. We work for you guys because you guys are the best listening audience out there in Nigeria. So we'll see you guys next week, same time, 7 p.m. West African time. We're talking money, the economy, and of course, finance. My name again remains Kalu Aja, and I'll see you guys. Thank you so much, guys. Have a good one, and bye.